Hello, everyone. I'm Jason from Truss Financial Group, and I'm here to make your mortgage journey easier, especially if you're a 1099 contractor. Today, we're diving into HELOC loans, how they work, why they're useful, and how Truss can help you tap into your home equity, even if you don't have traditional income docs. So, what is a HELOC and how does it work? A HELOC, home equity line of credit, is basically a revolving loan secured by your house. In other words, your home's equity, the value minus what you owe, acts as collateral. The bank agrees to lend you up to a certain limit over an agreed draw period. You can tap into this line of credit whenever you want, borrowing as little or as much as you need. It's often compared to a credit card. As you repay the balance, your available credit goes back up. You only pay interest on the amount you actually borrow. For example, if your house is worth $300,000 and you owe $200,000, you might get a HELOC on the remaining equity. As you pay down your HELOC, you can borrow again up to your limit. HELOCs typically have a 10-year draw period where you can keep borrowing and only pay interest, followed by a repayment period where you pay back principal and interest. HELOCs are popular for their flexibility and low cost. Because they're secured by your home, HELOCs usually come with lower interest rates than unsecured loans or credit cards. That's one reason people use HELOCs for big expenses like home renovations, education, or debt consolidation, cheaper borrowing than a personal loan or credit card. Just remember, since your home is the collateral, missing payments can risk foreclosure. What makes a HELOC different from other loans? A HELOC is different from a traditional loan in a few key ways. First, it's a line of credit, not a lump sum. Unlike a home equity loan where you get one big payout, a HELOC lets you borrow multiple times up to your credit limit. In fact, Bank of America explains that a HELOC is like a credit card, using your home as collateral. You can draw funds, repay, and draw again as needed. You only pay interest on what you actually borrow, not on the whole credit limit. Second, HELOC rates are usually variable and tied to market indexes, which means your rate can change over time, unlike a fixed rate loan. This variability is the trade-off for flexibility. Third, because HELOCs are secured by your property, they typically carry lower interest rates than an unsecured personal loan or credit card. For example, if you compare a HELOC to a credit card loan, the HELOC's rate might be several points lower, saving you money on big projects or debt consolidation. Finally, a HELOC versus a traditional mortgage or refinance. A mortgage refi gives you one big check but resets your loan, whereas a HELOC keeps your first mortgage in place and adds a second lien. HELOCs often have lower upfront costs, some have no closing costs, and flexible repayment. In short, a HELOC mortgage is more flexible than other loans. You tap it when you need it, only pay interest on what you use, and it's cheaper for large sums because it's secured by your home. Is there a HELOC calculator? Yes, Truss Financial Group has its own mortgage calculator right on our website. It is 100% free with no sign-up or personal info needed. Just enter your loan details to instantly see your estimated monthly mortgage payment or get a free HELOC estimate. It's user-friendly, so even first-time homebuyers will find it straightforward. So what are the HELOC options at Truss Financial Group? At Truss Financial Group, we specialize in HELOCs for self-employed and 1099 borrowers. We offer several custom HELOC programs. No tax return HELOC. No doc HELOC. This option requires no W-2s or tax returns. It's designed for people who have income but don't want to or can't document it traditionally. Instead of sending years of tax forms, we verify your income with things like bank statements or asset info. Truss's no tax return HELOC means you forget about tax returns and won't need to provide any documentation of income, letting you qualify based on other proof. Bank statement. HELOC. If you're self-employed or have write-offs, a bank statement HELOC uses your deposit history to qualify. We review 3 to 24 months of your business or personal bank statements and calculate your average monthly income. This can help you qualify even if you took deductions on paper. The bank statements show consistent income to support the loan. 5-day HELOC. Truss even has a super fast 5-day HELOC. This means once you apply, we aim to fund the loan in about 5 business days. The requirements are streamlined, no tax returns, no appraisal, and only the last 3 months of bank deposits are needed. It works on primary homes, second homes, or investment properties, up to 85% combined loan to value. In short, you get the same home equity line of credit, but with minimal paperwork and a lightning fast closing. In addition to these, Truss can also structure debt service coverage ratio DSCR loans for investors, but the above HELOC options are perfect for most self-employed homeowners. Lend.edu even notes that Truss is one of the best no-doc lenders for entrepreneurs and self-employed individuals, with funding possible in as little as 7 business days. What do you need to apply? Applying for a HELOC with Truss Financial Group is easier than you might think. You'll need some basic documents and info, such as photo ID, a government-issued ID, driver's license or passport to prove your identity, property info, your most recent mortgage statement to show what you owe, and insurance tax documents. Truss will confirm your home's equity and that your taxes and insurance are current. Income proof, alternate docs. Instead of pay stubs or W-2s, we'll ask for bank statements, usually the last 3 to 12 months. For self-employed borrowers, a year-to-date profit and loss statement or past year's tax return, if available, can also help, but often the bank statements alone suffice. Essentially, we look at your deposits and business earnings to verify you can make the payments. Additional docs. For a HELOC, you might also show homeowner insurance declarations and property tax bills. And we'll pull your credit report. Truss does a soft credit check initially to finalize eligibility. That's pretty much it. In many cases, Truss can approve a HELOC with just a few months of bank statements and a current mortgage statement. Because our no-doc and bank statement programs require minimal paperwork, the process is straightforward. How do you apply for a HELOC with Truss? Getting a HELOC through Truss is simple and fast. Follow these steps. Start the process. Call Truss at 888-87-8715 or visit our website to fill out a quick HELOC application. One of our loan specialists will reach out right away. Send your documents. We'll ask you to submit your ID, recent bank statements, mortgage statement, and any profit, loss, or tax info. For a no-tax return HELOC, you can skip sending tax returns. You can upload these documents securely online or email them, whatever's easiest. Underwriting. Our team reviews everything and determines your credit limit and rate. Because we do minimal verification, we can turn approvals around very fast. In fact, Truss can often fund your HELOC in as little as a week or less. We'll keep you updated through every step. Closing. You sign the final documents and your line is ready. Now you can draw on your HELOC whenever you need cash, up to your credit limit, and only pay interest on what you actually use. Throughout this process, you'll work directly with a Truss specialist, often via phone or email, who can answer your questions. Our focus is on making the HELOC mortgage process user-friendly for self-employed borrowers. We explain each step and even help estimate how much home equity you can access. If a HELOC sounds right for you, or if you want to apply for a HELOC, give us a call. Contact Truss Financial Group at 888-878-7715 today. Our friendly mortgage pros are standing by to help you explore your options and get started. Let us make accessing your home equity easy, whether it's for renovating your home, consolidating debt, or another goal. We look forward to helping you on your mortgage journey. See you in my next video.